Take a look at the markets. They're a mess. One minute it's up, the next minute it's down. Volatility has picked up considerably, but the VIX index sleeps like a baby. The financial establishments have priced in absolute perfection with the trade deal. Thousands of points on the Dow are associated with a perfect resolution to the trade deal. Anything less and the markets will respond negatively. This should be interesting. You came here for the truth, so let me unveil that for you. Today I want to talk about what's happening with the trade issues. We're going to look at China. We're going to look at the US. I have a lot to cover in this episode, so let's begin by taking a look at the markets themselves. Thursday's trading session was a mess. You can see it's down 400 points, it's down 200 points, then it comes back. It's all over the place. At the end of the day, the Dow Jones down 139 points. This had recovered significantly from its lowest point in the day. The S&P was only down a few points by the end. So we're looking at a very chaotic day, a very volatile day. Apparently everything is going to be just fine. Don't worry about it. And so the markets began to react positively right around 12 o'clock, and at that point things started to change and we started to hear of some different issues. But this is something that I think we should take very seriously. On Wednesday, China promised that Beijing would retaliate if the US followed through in its threats to hike tariffs on $200 billion worth of Chinese goods to 25% from 10%. This would impact many different industries, many different companies. We're looking at this right now being an effect that companies are suggesting. It's hurting their business, and obviously a jump from 10 to 25 will actually make this even worse. China says it's prepared to respond to all kinds of outcomes on the US trade talks. We'll see how this goes. At the time of this recording, I'm doing this prior to the tariff raising. We'll see if that actually occurs, or if there's an extension, or if they decide to postpone it. I'm just showing you here at this time, regardless of what happens, I do believe that these trade issues that we're talking about is simply one piece of the puzzle in this fight for the empire of the world. China is coming up and the US is trying to hold its ground and try to maintain that hegemony it has. For some reason, Asia stocks gain as increased tariffs on China loom. It doesn't make any sense, but they're basically suggesting that everything is going to be okay. Usually, the market would approach this with a wait and see attitude, but instead, they're actually pricing it in before it even happens. Nobody knows what's going to happen. In fact, it's suggested that we are headed in towards negative aspect here, and yet the market is pricing in positivity. It doesn't make sense, but that's what's occurring. We'll see when the actual market opens up how that is actually playing out. US companies are preparing for pain ahead of the tariff hike. I can't sit here and cry. That's one particular CEO had to say about the situation. This is all about their particular business and how they're dealing with it and everything that's been affected so far. Semiconductor companies obviously hurt by this, and this has been going on for a little while. However, the stocks in general have come up since their lows, but if we look at this on different timelines, you start to see the weakness that is definitely apparent, and the trade issues are one of those factors. Here you can see a chart just comparing the Dow Jones to a few of the companies as they've really taken a beating right now over the last few days. The trade issues have escalated and obviously caused a problem for certain companies more so than others. This article here is talking about Steve Eisman, the Big Short, and he had many things to say within this interview, but according to him, the biggest current risk is the trade issues. So he's saying that that's right now, that's front and center. He also talked about corporate debt. He's talking about the Brexit issues and so on, but he said front and center, this is the problem that we have to face. He did mention the fact that he believes at the last minute they'll come together, they're going to make sure everyone's all good, but if that doesn't occur, then all bets are off. In some other news, I don't know if many establishments are covering this, but it is important. China Mobile barred from the US market of espionage concern. This is something that has been part of what has been going back and forth with the US and China. We're not talking about agriculture products. I think it's pretty certain that China is agreeing to purchase more agriculture from the US. The US itself has some problems with agriculture right now, so I think they're going to run into some some trouble with that. However, looking at this type of situation where we have Huawei, where we have China Mobile, there are some big problems that are happening here with the US saying we don't want your companies to do business in our country, and they're having some issues going back and forth. Definitely keep your eyes on that. Foreign investors in Chinese equities aren't hanging around to see how the latest round of trade talks plays out. There has been some selling that has taken place. The last I looked, the futures for Asia were up, so I want to just pay attention to that as it happens. However, over the last few days, we have seen some selling that has taken place. Here you can see it peaked out in April, and it has been down ever since on this particular index. Anyway, just showing you foreign investors specifically that are selling. Here you can see the Shanghai Composite and the others over the last few trading sessions. They have come down quite a bit. We're looking at anywhere between 7% up to nearly 10%. So that just shows you the weakness that has been there after a lot of positivity. I mean, these markets have come up 30% plus. So we have seen a big change happening in just a few trading sessions after all of that rise that had been going on for the past few months. So this is really all I wanted to get to. Just wanted to cover the issue, just to show you what's happening after all the trade issues that occur at the time I'm recording this will be tomorrow. I'm going to obviously bring a video for you. Once that all happens, then I'll put together all the pieces and I'll give you that. I'm going to end the video there. If you found it informative, please give me a thumbs up. When you give me a like on these videos, you're supporting me. So I really do appreciate that. I provide these videos for you. All you have to do to support me is click that one button. So thank you very much for doing that. If you want the financial education you were not taught in school, then all you need to do is read these two books. Once you read these books, you have the foundation, the history of the asset classes, your tax incentives, reducing your expenses, everything in between. Check them out at the link in the description. If you want the audiobook, that's available at themoneygps.com. If you want to see the fastest growing video I have ever done, we're talking about 4.2 million cars sitting in lots, just rotting. You got to check it out. Click on this video and I will see you there.